Hello, hello. Hey, it's Daryl at Business Credit Works. Just going live again to talk with you guys a little bit about what is your business credit score. I get a lot of questions about what that credit score is and how to build it. So we're just going to do some high-level basic information on the business credit and the business credit score and get you guys up to speed on things. Is that credit score plays a vital role in your business's health and as you grow and scale your company, you need that credit score. So we're going to talk about today's topic is what is your business credit score? All right, we're going to add to presentation and get started going. Get started. Because I want to be respectful for everybody's time. This is just the quick hits of going live and getting people what is your business credit score, giving guys the information to get you up and running. We're coming up to a new year, so I know everybody's going to be starting their businesses in the new year. But to build business credit, really, you need to be starting to think about it and laying that foundation now. Because just as a consumer credit, it takes a while for you to build that credit score. Now, compared to consumer credit to business credit, goes a lot faster to build $50,000 in strictly business credit compared to the consumer world. Okay. With today's topic, we're going to stay on point because I tend to go off in different places because I've got a lot of information up in this head to share with my business owners to help them grow and scale their businesses. So the first thing we're going to talk about is what's your business credit score? All right. The business credit score it's credit in the business's name. It's looking at how well your business pays its bills and not you, the business owner. Remember in the first video I did, you're establishing business credit with your EIN number, not your social security number. So all that debt is going to sit on the company and not your personal credit score. Two separate credit profiles. The hardest thing for people to let's see unplug from when I talk to them about credit, business credit, is they think about the consumer world, what they know. They've grown up with consumer credit. No one's educated us on business credit and the importance of it, how to build it, how to grow it, and more importantly, how do you leverage that as your company grows and scales. So, business credit score is just credit in your business's name and using your EIN number and not your social security number. A couple of credit scoring systems, very, very important. Dun and Bradstreet is the number one. Okay, they've been around since I believe 18 or 1900s. They started the whole game. Okay, they started it, and I tell people I didn't invent business credit. It's been around starting with Dun and Bradstreet since about the 1900s. Okay, um, and I know you guys are familiar with the Dunn's number. That's a nine-digit number that Dunn's is good in the Dunn's world, basically. That's how they track your business's payment history and experiences. How many times your company buys things, when they pay the bill, is it on time? Okay. If the Dunn's number is very, very important because you never know what vendor that you're working with, what credit reporting agency they're working with. They could be working with three. Dun and Bradstreet's number one, Experian, Equifax. TransUnion does not do business credit. So you'll never hear of a TransUnion credit score for your business. They're only in the consumer world, okay? The main score is what's called a paydex score. Okay. A business must have both a DUNS number along with making purchases, at least three purchases to trigger DUNS to start creating a credit score and credit profile. And I typically say 3 to 5 payment experiences. And what I mean by payment experiences is your company actually making purchases from vendors who do two things. They extend lines of credit to businesses, and two, they report to the business credit reporting agencies such as Dun and Bradstreet, Experian, and Equifax. Very, very important, those two things. They need to extend lines of credit to businesses, and they need to report to the credit reporting agencies, Dun and Bradstreet, Experian, and Equifax. Very, very important to know. So when you're out and you're applying for credit in your company's name, ask those questions. Okay. And I'm also going to put out there, don't get mad if that person that you're talking with in the store does or does not know about business credit and or the commercial division. The person in the store is the retail division, retail store. So they might not be familiar with the commercial slash business credit world as much as they're familiar with the retail version. Okay, and they typically have to make a phone call, or they might even tell you incorrectly that they do, but they really don't, or vice versa. It's just they don't know, and they might not tell you that. They might just give you the wrong answer. But those are just questions to be aware of when you're applying for credit at the vendors in the retail stores, because you don't know if they offer business credit and what credit reporting agencies are going to report to. And just more important, you're thinking for D&B, Dun& and Bradstreet, that 9-digit number is strictly used in Dun& and Bradstreet's world on their platform to track how well your company is paying its bills. And that's what creates that credit score, credit profile, at least 3 to 5. I say 5 trade lines because the credit reporting piece has to happen, meaning you have to make a purchase, pay the invoice, 30-day reporting cycle. That is the same as the consumer world, that 30-day reporting cycle. So if you make 5, you're guaranteed to have at least 3 showing in a period of time. That's the trigger for them to create the credit score, credit profile, and it's also the trigger for you to move to the next level of applying for credit from different vendors. Now, the rating system as Dun and Bradstreet can get convoluted. So we're just going to go with the company gets the lowest rating of 5. So when you go and check out your credit score, if you've got 5, it just simply means none of the vendors that you are working with have been reporting to Dun and Bradstreet to create a credit score, a credit profile for your company. That's all it means. A vendor you might be working with might be reporting to Experian or Equifax. They all report to the 3 different ones. So that's very important to know who they're reporting with. But in this case, we're talking about D&B. You check your credit score, your business credit score, and it has a 5. It just simply means none of the vendors or companies that you have been doing business with are reporting your payment history, your payment experiences to any of the business credit reporting agencies. Okay. So don't freak out. DNB, it is they err on the side of caution because basically they don't know you. You're a new company. You're a new startup. Just as when you got your first credit card on the consumer world, where you have to build a credit score, make the payment, build that relationship with the different vendors, they're just trying to figure out if your company can pay its bills, just as the consumer world, when you apply for your first Visa and they gave you a $200 credit limit, they're just trying to figure out if you personally can manage debt. That same logic is the same for the business world. So they're just trying to see if your company pays its bills on time. And as it does, it helps build that credit score and credit profile. As I said, they have their own internal rating system. It's a Dun and Bradstreet 9-digit number, and also to a 9-digit a code, the DNB code, Dun and Bradstreet business credit score. Okay, or a Paydex score. I'm sorry, it's a Paydex score at DNB. And remember, 3 to 5 payment experiences. What I mean by that is you actually applying with vendors, getting extended credit in your company's name, making a purchase, 30-day reporting cycle with 3 to 5 different companies doing that. That triggers DNB to start building the credit score and credit profile. Very important to know. They have a delinquency predictor, and all of these is just until you build that experience, that history, uh, they're going to put err on the side of caution, and that caution is going to be they don't know you basically. You've got to establish that profile and that credit score and credit profile. So all of their tools, because you're starting out with little to no credit, it's going to be on the high risk side of things. But as you're, as I said, getting that experience and paying your business pays its bills on time and building that credit score and credit profile, then that indicator will go from high to medium to low to good. And once again, Experian, oh, I'm sorry, jump into Experian and Equifax. They aren't going to generate a business credit score for a company until you got to make purchases, guys. You got to buy things from vendors who report to the business credit bureaus and make the payments, actually make the payments 7 to 10 days before it's due. That's how you get a higher business credit score. So I tell people if you wait and you pay the bill just on time, your business is going to have a just on time credit score and credit profile. We are overachievers. We want to pay that invoice 7 to 10 days before it's due because we want to build that good credit score and that relationship with the various vendors. Okay. And as you said, new companies have very little to no credit history. That's why we're building and buying from vendors and building that credit score and credit profile. And as you said, just starting out, you're brand new. So y- you're making vendors nervous until you start having that score and credit profile. Experian and Equifax, unlike DNB, they will create a report for a business with zero trade lines. Okay. All they want is a business name and address and the SIC code. The SIC code is basically what industry, high level, what industry does your business fall under? Okay. Goes in a little more detail, but this is strictly a presentation on what is a business credit score. And those are called the business demographics, basically. Experian Equifax, once again, if Experian Equifax has your basic business demographics, they will populate a report, but don't expect to have a good score because they just are populating, creating a report, basically creating a file for under your company's business name. And as you make payments and my apply for credit, that's when the credit score comes in. And just once again, high risk. If you have no payment history or experience, you're going to be classified as high risk across the board until your company can basically prove itself and prove it can manage debt over time. Now, Experian will have what's called an IntelliScore Plus. I call it IntelliScore. And that's the financial stability risk indicator for their platform. Okay. That's just they all three have their different financial stability indicators. So theirs is that financial stability risk indicator, and their score is an Intella score. The active business indicator will flag a company as being inactive. Um, and a company will only be approved for maybe 1,000 in business credit. And that's just starting out. I hear stories and I have people come to me and they'll start right at going to get a MasterCard and Visa for their company, applying, getting either turned down or getting what we call a starter account. Now, they have no credit established, no history, no credit score, and they're going straight to the top. MasterCard and Visa, the cash credit cards. So if they luck out and get approved, they'll get approved for a starter account, and that just means a lower credit limit versus if they had trade lines and a score and a relationship and the file started, they would have got approved for much more. But people don't know there's a method to the madness, and there's a way that you go about building a credit score and credit profile out correctly. Equifax will break down when they see a business as risky. So they go in a little more detail. They will not have a 24-month history for a new company. They will not have a 24-month history for a new company. Um, but on the positive side, you will have no inquiries, or liens, or collections, or bankruptcies. So each three credit reporting agencies' risk indicator, they analyze the file differently. Okay. In the business credit world, really, I tell people the five circles that we know on the consumer world go out the window. Payment history, time, mixture credit goes out the window. In the business credit world, really what matters is the payment history. Are you late? Or are you better, let me put it this way. Is your business paying its bills late? Because we've got to get out of the mindset it's me paying the bills. No, it's your company paying the bills. Is your company paying the bills on time or is it paying late? Remember me saying earlier, if you pay the bills just on time, you're going to get a just on time score. Okay. If worst case scenario, pay them on time. That's going to help build the score. But we are all overachievers. So we are going to pay that bill early to get a better credit score. Business and credit reporting agencies in the business world will generally look at just 12 months. Where on the consumer side, it's 24 months and more. I should say that. Not going into a lot of details, but the banks themselves have their internal rating system, and we have access to reports that can take us the history of a person's credit file. But for the general public, consumer credit reports are looking at 24 months, and in the business, looking at 12 months. How can you build a business credit score from scratch? That's the $1 million question. And another $1 million question is why and how it's hurting you not having a credit score and credit profile. And I tell people startups, one day, well, actually 1 second out of creating your entity, LLC, S Corp, C Corp, nonprofit, with your EIN number, a sole proprietor is not an entity. Okay. But 1 second out of creating that entity, your business can start building business credit and get approved that same within the same hour after you apply with vendors that extend that does two things, guys. As I said earlier, one, they extend lines of credit to businesses, and two, they're going to report to the business credit bureaus. Every vendor that you work with won't report to the business credit bureaus. At Business Credit Works, that's what we do. We've got programs that the vendors on our platform, they will report and they are going to stand lines of credit. So we've got it all mapped out for you so there's no guessing. We've got a research and development department that are constantly adding and taking away vendors on our platform. It could be from non performance, bad customer service, and so forth. But we do all the heavy lifting for you with our credit coaches. That's what they're there for, is to answer questions, guide you through the program, and prevent frustration from trying to find a list of the vendors who report to the business credit bureaus and also extend lines of credit to companies. And just simply building business credit from scratch is just that, developing a good payment history. Okay, start with the starter vendors. New, a lot of times people have heard of Quill, and one thing I will say, a lot of the new vendors, Quill and Uline, those are the most popular ones. Now that business credit is really coming mainstream, they're changing the guidelines, they're changing the rules on how you get that line of credit. At one time, you can make a purchase from Quill or Uline, make one purchase of say $70, and they'll give you a line of credit. Well, now that they know that people are coming to them just for those purposes, they have changed the guidelines to where you might have to make 3 purchases, 4 purchases before they will start reporting and extend you a line of credit. So just as we start learning the game and understanding the guidelines, they change it on us. So that's why it's important to work with a credit coach and a company that's on top of those things for you. So I know everybody's very, very busy and you don't have time to chase down the vendors. That's why you hire a consultant and listen to what they advise you to do, and they fast track you. The time it would take for you to do this on your own, ain't nobody got time for that. Get a consultant, work with us on Business Credit Works, our platform, and we can fast track you. Okay. Secured credit with collateral. This is financing obtained with some form of collateral. And of course, creditors like that collateral, because it makes them warm and fuzzy. If you should default, they can come take your stuff. Okay? That's simply what collateral is if you default, that lender can come and take whatever you collateralize to get that loan, come take that. But with our company, with business credit programs that we have, they're unsecured. They're not tied to collateral because you're making purchases, paying the invoice, and you're building a credit score. So therefore, you're not personally guaranteeing any of the debt, any of the trade lines, the vendor accounts that you're opening and establishing under your company's name. And let me also say this. When I talk with doing workshops in the community and talk with clients, and I talk about credit cards, the first reaction is, "Oh, I don't want a credit card. I don't want a credit card. I want a line of credit." Well, in our world, they're one and the same. A line of credit is, the way it works is you're only billed if you use it. So if there's a zero balance, there's no payment due, unlike actual loan, a term loan, where the 15th of the month your payment is $300. But in a line of credit card, if you're not using it, there's no payment due. They're one and the same in the lender's eyes. Credit card, line of credit, one and the same. Uh-oh. Let's see here. I'm not sure why it just went blue on me, guys. It's going along good. Let's see. This is a new platform for me. Let's see. We got that one. And just once again, secure credit with collateral. If your business has no sales, you have the option to use your stocks, bonds, a 401k. There's another class I'm going to do where you can use your actual 401k and have your 401k, borrow from your 401k and let that fund your business and make payments back to yourself. Creative financing at its finest. Just making you the bank from a 401k that you've already established, and you can borrow against it, make payments back to fund and grow your business. Okay. And that's another workshop I'm going to do too. Today, we're just talking about what is your business credit score, building payment experiences, the holy grail. Oh, develop payment experiences of your new business, guys. Just simply means it, apply, get approved for a line of credit, make a purchase, and I will also get pushback, for example, on Quill and Uline. Well, it's nothing on there I would use. Well, paper, toilet paper, cleaning supplies, and the bigger picture is you want to get a line of credit extended to you to help you grow and build your credit score and credit profile because the number of trade lines, as more trade lines you get, that also helps to cement that business credit score and credit profile along with your payment history helps build that credit score and credit profile. Okay. Just simply means paying everything back every single time. And what? Paying it early. We're overachievers. We're overachievers. We are not going to get a just on time credit score. Okay. We're going to overachieve and pay it early and manage that score beautifully because that's the first foundational piece to getting what's called non-recourse lending, where now your company, a healthy company, time in business, revenue can start applying for loans on its own without you, the business owner, having a person guarantee it. Another workshop. I'm just threw that little tidbit out there to keep y'all interested, wake you up. I heard you go non-recourse. I ain't got a person guarantee nothing. No, not with that non-recourse. When you have the foundational pieces in place, credit score, good, strong credit score, good financials, time in business, really making your business foundation credit file strong and healthy for any lending institution to feel good about extending you a line of credit. That's where we want to be, and that's where we will be. Okay, we will be there. We got to have a goal. That's our goal. We're trying to build generational wealth. And I can't say this enough. The why. We're trying to build generational wealth for why? Our families. But we're using our own personal credit and assets to do that. Every savvy business owner knows use other people's money, other people's credit. If you've heard of OPM, other people's money, OPC, other people's credit, leverage that and not your own personal credit. And if you're not sure why I'm saying that, I'll give you an example. Say, for example, you've got a husband and wife that own a company. They both have maxed out their personal credit cards for their business. They have no business credit established. Say the husband passes away unexpectedly, he just left all that debt on the family with his wife and his kids. So the only option she has is to go personally bankrupt, or else they're going to take everything that they worked so hard to do. And of course, the business is closed because the spouse has passed on. Whereas if you're building the foundation of the house correctly, you're managing the debt correctly, you have established business credit, another option that she would have is to bankrupt that entity and start fresh. Okay. Because we all know starting a business is very, very risky. We all know the statistics of the success rates, but we want to be smarter about starting our businesses. And I also use the saying we want to go slow to go fast, meaning start building your business credit today, 6 months, 8 months, a year from now, you're going to have different options available to you and your business. Okay. Because one thing I see all the time is people will wait until they quote I'm ready to build business credit or I need it. It's going to be a process. It's a relatively slower process to get $50,000 of varying trade lines from net 30s, gas credit cards, store credit cards, MasterCard and Visas. Take any order I did. MasterCard and Visas is level 4. Level 4. Long day, guys. Okay? Yeah, MasterCard and Visas is level 4. And every level, there's a 30-day reporting cycle. So do not, if you can't take anything else from this today, do not wait until you are ready or need business credit. And for that fact, lending money. The best time to look for money is when you don't need it because it's never going to come fast enough when you're in a situation where you need the cash. It's going to take forever to get it. And if you need it, it means that something broke. There's an emergency. Whereas if you have the credit lines already established, you can simply use one of your business credit cards to get through that hump and pay the credit card back and manage that much, much easier. And once again, just building payment experiences that report to the credit reporting agencies. Non-reporting creditors can help also, okay? Because once again, you don't know downstream where that non-reporting creditor might show up on the lending side of things. Okay, good payment experiences will help you raise your score each and every time. Your business needs to pay its bills before the due date, 7 to 10 days before. And just to recap, because I want to be respectful of everyone's time, what is your business credit score to start? Okay, we talked about get a DUNS number and get established in the DMB system. And we do that by 3 to 5 trade payment experiences with Dun and Bradstreet with a vendor that reports to Dun and Bradstreet. 3 to 5 of those to trigger them to create a credit file, profile, and score under your business's name. That's how DMB works. Okay. Um, the credit reporting agencies can calculate much so that they err on the side of caution because they got to get to know you. The only way to get to know you and your company is by you paying your company, paying its bills before the due date, and establishing more and more and more trade lines to show that your company can manage debt. That's huge. With business credit, you can be a startup and establish business credit. The question I'll get to is I have bad personal credit. Will that come into play? Technically, no, it does not come into play, but really, I would be doing you a disservice by not telling you you need to get your consumer credit together also, because we're trying to grow and scale our businesses and we need that credit. And when you trying to grow and scale the businesses, they're going to start looking at your company and they're going to, that underwriter and that lending institution is going to look at you personally also. That could influence the file. So you really need to start working on your consumer credit also, as well as your business credit. And your goal and mission is to build payment experiences, as many as possible, because that just sets the foundation for the lending side of things and that non-recourse with Dun and Bradstreet. Okay. And for those of you who don't know, I am Daryl Johnson, founder and CEO of Business Credit Works. I have been in operations, starting at Charles Schwab for 10 years in ops, and then moving over to the banking world for another 10 years. I've done loan loss mitigation, like short sales, foreclosure, loan origination, and even today I have what's called I call a hybrid model. I'm still in corporate America with a W-2 job working for a wealth management bank in their family office division, doing loan processing for high-profile clients, buying homes. So that's my day job. I still have that. I enjoy doing it. I'm learning a lot. I started my company about 5.5 years ago because I was doing foreclosures in Phoenix, and I saw how families were impacted. So one of the prerequisites I had for Business Credit Works was actually two. One, I wanted to give any lending institution, since I'm from the back operational, from a loan processor to an underwriter, I know what they're looking for internally in the bank and what the underwriters like. I wanted to give any lending institution more positive financial data to measure credit worthiness, credit score. Just as that consumer credit score tells a lending institution you personally can manage debt, that credit score on the business side tells a lender, hey, my business can manage debt. And now they pull your personal credit score, and that's good. You personally can manage debt. Trust me, underwriters will write you a bigger check once you have proven on paper that you have good character, and that starts by building that credit score on both platforms, personal and business. So like I said, I would be doing you a disservice if I did not advise you guys to not just look at business credit, but you need to have your consumer credit together also. So here at Business Credit Works, we have a partner that we work with on the consumer credit side. We also do lending, so from small business loans to real estate loans. So we have as a broker, so we can help in that area also. So from consumer credit, business credit to lending. And then with my mortgage background, I can also talk on different topics with you. So we do some consulting also. So that's what I have for you guys today. So much appreciate you taking the time and energy and brain power. It's a Wednesday. Yeah, it is a Wednesday to jump on to listen to Uncle Phil go on and on and on about business credit. But I want us all to win, and I want us all to use our knowledge. That's one thing that we have been short of because we didn't know business credit existed and how and why it's helping or hurting us by not knowing it, not getting involved, not taking action in building that credit score and credit profile. Okay. Very, very important. We've got to do things differently because, once again, we're building all of this for our families. We need to do things smarter and basically mitigate our risk. And that's what business credit will do, along with giving any lending institution more positive financial data to measure credit worthiness. That's the invitation to the next step in the loan process. What's your credit score? If it's not a good credit score, you won't advance to second base, basically. Okay. I jokingly say the credit score is kind of like a invitation for a drink. Okay, I'm not a drinker. Invitation for a cup of coffee. Okay, then you get a cup of coffee. Now, okay, now let's look at your credit score. Oh, you got a good credit score. Now, okay, let's go to dinner. That's just my in my head how I look at credit. And from a lender perspective, that's the first step. It's a dance. If that credit score is not in place first with any lending institution, you will not get asked to dinner. You'll get told no, and you'll wonder why. Okay. But I'm going to sign off now. So I want to be respectful of your time. Please look for me more and more. Like and share. Tell your friends. Tell somebody you don't like about business credit about me. I appreciate it because we all want to win, and it's about giving back. Just give back, positive energy, positive attitude. It's always going to win the race. Always going to win the race. Positive attitude, positive energy, and just helping other people. Okay. That's what we're about here at Business Credit Works. So signing off, Uncle Phil, Daryl Johnson, Business Credit Works. Thank you. Look forward to seeing you guys in the next video.